Hey guys, we have Ben Taylor, CEO of SoftLedger here today. I'm really excited to meet you, Ben. You're CEO and co-founder of SoftLedger, 9-year-old company. We're gonna, right? About 9 years?
Yeah, from the initial idea, it's been
Awesome.
Yeah.
Awesome. EY. You
Yep.
started your career at EY. You've got an accounting background from Maryland?
That's right. Yep.
Okay. And you also did Fannie Mae.
Yeah. That's
Yeah,
right.
that was your first.
After Ernst & Young and public accounting for a bit, and then did financial reporting at Fannie Mae for a few years.
That must have been interesting. What years was that? Was that in the middle of the? I'm starting to think that might have been in the middle of 08, 09?
No, it was a few years after that.
Okay.
So we were, it was post that, and everyone's like, "What are you?"
You were doing a mop-up job?
That was the line leaving. But it was an interesting time to be there because during the time that we were there, they actually paid back everything that they had drawn down over that time. So it was, but the numbers are kind of crazy because it's not. They don't produce a tangible thing,
Right?
So it's tough to, yeah. So I think one of the quarters we were there was like the largest earnings in like corporate history or something, but it was because they released a valuation allowance. So it's just trying to unwind what that means.
Right.
And yeah, it was interesting.
Yeah. Well, the numbers. I always say the numbers tell the story, right?
Yep.
The real story. If you follow the money, it becomes pretty obvious. Why don't you tell the audience, like in general, who you are and like what SoftLedger is and how you got involved in doing this from Fannie Mae?
Sure. Yes. So backgrounds in accounting, CPA, did big company auditing and reporting, and then went to when I was managing a few different areas in the accounting department for a public company. It just took too long to get the financials every month, and what that means is it took too long to close the books. Took too long to close the books because of this clunky accounting system that we had in the middle, and so it seemed like a problem that we could be solved with software. And my longtime friend Jeff Ostrega, who we've been friends since freshman year at University of Maryland, he's building applications for a long time, and after some convincing, he agreed to take a shot at building a general ledger. And
so you're at Fannie Mae at the time? Or
this was actually, I was at a small public company called Mattersight in Chicago.
Right. Were you just getting frustrated? Hey, I'm not making any progress. And I'm always interested in when the pivot, hey, I'm going to leave.
Yeah.
I'm going to leave this job and go build my own deal.
Well, so we were using this old accounting system. It was one of the first general purpose accounting systems I came to learn in the early 80s. It was one of the first ones that ever came to market. And we were doing all this stuff to get data in, just to get it out, to make all the decisions off of an Excel workbook. And it just seemed crazy to me. It seemed like that problem could be improved through software if you just use the latest cloud technology. And that was like kind of an epiphany. We were talking about 9 years ago this month, started drawing, what the screens of this thing I thought should look like. And this is, steadily. At February of 2017, we went full time. That's when we got our first investor, Mucker Capital. And
did you get your investor before the first client and the first design of the software?
Well, we had something, or thought we had something when we went full time, but it took about 10 months after that. So January of 2018 is when we first had our a paying customer using the system.
Right. You get a customer, and then you start to really iterate and make the tool better.
Exactly. Yep.
It's a message that nobody talks about software. Hey, software is constantly being developed, right?
Yeah.
It's never going to just be stagnant. And you have to constantly upgrade it and fix it and clean it.
Exactly. Yeah. And without one customer, it's kind of like you don't have any reference point to talk to. When you have one customer and you're talking to the next prospective second customer, you can say, hey, I have a customer that is, you have one customer. And then you have three, and you can say, well, one of our customers. And it just, all that kind of, it took a long time to grow that way, but it was really, I think to say if we had an inflow of customers early, the product would be much less good, to put it bluntly. So,
Why you say that? Because most CEOs want, hey, I got 1,000 customers
Right.
on day one, and now I'm going to 10,000.
that's what we wanted too. That's out of the gate, we would have loved that. It would have, but in retrospect, it would have moved the product in a different direction because we rewrote the product 3 times, 4 times. Jeff would keep me honest here, but yeah, it's really tough to make big changes like that if you have a lot of customers.
Right.
If there's 4 or 5 of them, you can handhold. If there's 10 or 15, you can still kind of get it. At this point, it would be, and there's some things where we've thought about, oh, should we make this change that requires going through each piece of the product, and it's just really difficult.
So you went to the PE firm or the investment firm was called Murdoch?
Mucker Capital was
Mucker,
the first investor. Yeah.
And Mucker put some money into it pre-revenue, pre-sales.
Yep.
Right? So you must have been selling a good, what was your story then to them?
This was built out of frustration with my job, so I have the domain expertise.
Right.
We have, my co-founder is a full stack engineer and can build the product. I think at some level they figured we wouldn't kill each other, and that would be, that's that's a big problem with early stage startups. And so if we were willing to move out to LA, and obviously
they wanted you near the money.
Yeah. Well, and also I think there's a level of commitment there of us deciding to uproot. Jeff was in DC, I was in Chicago at the time.
Right.
And if we're willing to move out there, move our, with our wives, go out there and uproot everyone, that means we're in it.
Yeah.
And that was important, I think, early on.
I agree with that. I tried to get Node 40 to do that too. I just think it's really cool. I mean, just and first thing you said when you came into my place here is like, hey, I really like meeting face to face. I think there's so much value.
Yeah, like the benefit of remote is just, there's so many benefits, but yeah, there's something that is just really not possible to recreate it from in-person interactions.
Yeah, for sure.
Right.
There's a quality to it that's deeper.
Yeah.
So what is SoftLedger today? What is it what problem are you solving? And who's the customer? Maybe the customer first, so the audience knows, oh, they deal with Shell Oil Company, right, or they deal with a little company like Gary's company.
Sure. So we sell to businesses that have multiple entities, or foreign currencies and digital assets. So those 3: multi-entity, foreign currency, digital assets. If you're one of those, we should talk. If there were 2, definitely. And then if it's all 3, then it's a slam dunk.
So I'm a guy that's doing 18 million a year, let's say, in revenue, and I've got sterling, I've got euros, I've got US dollars, and 30% of my portfolio's in crypto. Mm-hmm. I'm the guy. I'm your guy.
Yeah. Usually it's businesses, but if it's
a business,
if it's yeah. But even if it wasn't, in that case, that could be the level that it's just really difficult to track that. I think we were talking about this earlier. Complexity. Once the complexity hits, that's where we come in, and that can really vary depending on your business. For digital assets, that could be 10, 15 people.
Explain that to people, because I don't think people really understand how traditional assets are measured, accounted, tracked, traced, valued, audited, versus digital. I don't think people really understand the difference between a piece of real estate or a barrel of oil and Bitcoin.
Sure. So how I like to describe it is money, like pounds, dollars, yen. Fiat money has standard rules and regulations that simplify the accounting. And so when you're booking transactions in dollars, pounds, yen, then you can do that more directly. Whereas with digital assets, you have these financial assets that move around like money, but they need to be tracked much more like shares of stock. And so each lot needs to be tracked separately. If
For what's a lot?
a lot is you bought a certain number of Bitcoin, 0.2 Bitcoin, on a certain date at a certain price, that becomes, in most cases, and this depends on the jurisdiction, but you track that on a first in, first out basis when you compute your gains or losses. So when you sell it or trade it into something else. And that holds true for largely across the spectrum for digital assets.
So let me break that down, make sure I understand you correctly. So if I buy this house, this house has one contract, the house is X dollars, boom, that's my tax. The state of Florida is going to treat my house as if it's worth X millions of dollars. It's going to associate a tax with it. Let's say I have the same value in Bitcoin, right? I could have maybe 10 Bitcoin, but there's going to be 80 to 100 different lots. Right now it's about 8 to 12 transactions per Bitcoin. I think that goes to like 100 in the future.
Yeah, exactly.
It gets much bigger, and you have to account for each and every one of those lots. Is that?
That's
Whereas
exactly.
the house has one tax treatment, but this one, the same amount of money, would have somewhere between 10 and maybe 100 different events. And they're all different sellers. So there's other Social Security numbers that have sold into this that they have to do the accounting for also.
Exactly. Right? Yeah. It gets, and then if you're a miner, if you're producing lots and lots of transactions, that could be thousands, tens of thousands easily. So,
this fractionization of planet Earth, that's what I call it, the digitization of planet Earth. This is going to be great for your business, right? Because it's probably quintupling, if not more, the amount of things that need to be measured, tracked, traced, and accounted for. Is that correct, or?
Yeah, I think that there's a huge, we're witnessing a huge shift to using blockchain and related technologies to kind of move a lot of the existing financial infrastructure over to, and that's there's a big opportunity in tracking that for us, because there's things that were traditionally not so liquid that are more liquid, maybe not so liquid as like a share of stock, but it facilitates moving around of assets in a way that wasn't possible before.
Well, now you bring up the liquidity thing. This house isn't that liquid. What's the liquidity matter? Because this is not really that liquid. We don't really know what the price is today of this house versus Bitcoin.
Yeah,
I think it's incredibly liquid.
Yep.
More liquid than this house for sure.
Yeah, it doesn't. I mean, the form that it takes obviously doesn't create the market, and so I guess the liquidity is, I think, more of maybe the better way of describing it is like removing friction and transferring assets.
Got it. Got it. Yeah.
Yeah.
It's not a slow process. It's very fast.
Exactly.
Yeah.
Even for components of securities trading where there's blockchain applications, it's a lot of ways probably going to look the same, except it's just going to be more efficient. Is the promise there?
Do you think we're early in the digital journey or mid-tier? And the reason I ask this is, I mean, as soon as you start describing your business to me, I'm like, dude, I think this guy's sitting in the middle of like very early days. And you're going to have a lot of people needing to do accounting in a much more efficient manner than's ever been done before. Like, we just didn't have accounting. Your frustration was you didn't have the tools to do the job without being a huge cost center to your parent.
Yeah, and some of them, even at the time we did it, there was better technology. But I think that what we've built layered on with what's happening with blockchain is it starts to converge in interesting ways. So I agree, it's really early. I think in some ways, a lot of people compare it to the evolution of the internet, but you couldn't bet on early internet protocols.
No, that's right.
but that's some of what's going on. Not obviously that's underselling it, but there's financial assets on these protocols. So I think that's drawn attention to this technology as it's forming in a way that just hasn't happened before. So it is early. It's going to take a long time for certain aspects of this to really evolve, but I think that's what we're seeing now.
You and Jeff started SoftLedger when?
We started September 2016, I think, is when we decided to, okay, we're definitely doing this. And then we went full time in several months after, in February of 2017.
Right. So you're on this journey now a good 7 years.
Yep.
You think you were too early, or you needed to be there then to get the base level, your foundation secure enough and to understand, because it's moving fast now, right? I mean, we got the Treasury Department dropping rules. Like, it's getting very clear how crypto is going to be treated in the United States.
Yeah, I think it's tough to go back and figure out what what would be a different path. I think to get here the way that we did, I don't know how we would have done differently. I think the timing was great in a lot of ways.
Yeah.
To iron out the kinks early, figure out what we were addressing. When we built the digital asset module, we did it inherently general purpose, knowing that we don't know what's going to come up next. So that's been the focus from the beginning, is make it so that whatever is the next type of asset or protocol or whatever comes up, this will be able to handle it. And so we're very.
You knew there was a tsunami of change coming. You're like, hey, we need to be fluid enough to don't put on don't get hemmed in.
Exactly. Yeah, and that's it's tough sometimes, because that means that things aren't as automated.
Yeah.
Because you can't build for this new chain that comes up. You don't know if it's going to be around, if there's going to be real economic activity on it to warrant change to the software.
Interesting.
Yeah.
What's been the biggest challenge for you? Because this is your first. Hey, you and a partner, and
Yep.
Hey, we're not on payroll anymore. We're building something. How old are you, by the way?
39.
39
Yep.
years old. So you've been on this journey since you were 30. That's awesome, man. Really, it's a lonely journey too. From one entrepreneur to another, it is a lonely journey, painful journey. You're underpaid most of the 10 years, and then hopefully one day you get overpaid.
Right. It's an interesting, there's many challenges in the way. Starting off in public accounting, I worked as many hours as somebody could work.
Sure.
So I figured I'll just work hard. Just work really hard. That's fine. And then it's been more than that in a lot of ways, as I'm sure you know. Just like it's all encompassing and learning how to. I closed the books January 2017, February 2017. I do all things non-accounting. Selling, all the stuff I hadn't done before.
Right.
And so just that shift and having to just power through is was really the hardest thing, is to get that first customer after hearing 10,000 no's or whatever it was, and then get the next one. Just keep on keeping your head in the game over those years was I didn't appreciate how hard that would be.
And what's hard about it? Because a lot of entrepreneurs from 18 to 80 years old follow me. Mm-hmm. What is it? Because everybody thinks their own journey is just unique and different. I'm like, no, we're all lonely pirates, man. Yeah. What's been the hardest part about it?
The hardest. That's a good question.
Or maybe the part you didn't expect, you weren't planned for. Because I think you raised money really. Like, one, I commend you for the amount of money you raised. Mm-hmm. You didn't raise stupid amounts of money. I think most people would have been like, wow, he must have raised. No, he didn't raise too much money. And I'll let him tell you if he wants to. And he didn't. I don't think you raised it at stupid valuations. I see a lot of people making this mistake.
Yeah, I didn't expect, I guess, how many aspects of this are a sales motion, and that I actually do. I like sales a lot more than I thought I would, but it took a while to figure out how to do that in the way that worked for me, and then just being pragmatic for a long time, is how we ultimately got there without raising money. Just a couple of startup accelerator investments, angel investments for a while before raising our seed round a few years ago. And yeah, so to date we've raised 2.6 million, and it's that's so we've grown pretty efficiently, which is given us options. We're cash flow positive now, and it that just buys us time and makes us so that we don't have to always be beholden to that next round of funding.
Yeah. Well, that's a business where you're just constantly raising money, right? You become a money raising business, not a software development business.
Yeah.
Some of your comments are taking me in a little different direction, but I think it's really fascinating. You said that you've had to do a lot more sales than you considered or thought about, and that you like it. What did you think about sales before? I mean, what did you think before you got into this? Because it's all sales,
right?
The whole deal. Your job is sales.
Yep.
The whole deal is sales. Sales to your partner, sales to the private equity, sales to a customer, sales to me, sales to your partner. Sales. It's hey, do I want to do business with Ben and SoftLedger, right? Like that's really comes down. I think people still make decisions on people and companies.
Yeah, so it's a good question. Going into this, I didn't really have any experience with sales, except for a terrible college job selling advertising. I walking cold into like a barbershop, trying to sell them this advertising space in this crappy newspaper. I forget what it was at the time, but that was my experience. And I just stupidly kind of thought, okay, that's sales, and it's not. It's solving customer problems and actually going through and being genuine about it, and trying to paint things in the best light, sure, but not pushing the needle too much. Solving customer problems in a way that builds trust over time. Keeps people coming back, and then across the board, you're selling when you're selling shares of stock to raise money, and just all across the business is a sales process. That's kind of what I meant by that.
So did it have a bit of a tainted meaning, the word sales, before you got into it? Because you said, hey, until I could make it on my own, like until I could make sales my own, right?
Yeah, it did. Yeah, and I think that's probably true. Yeah, if you've ever sold to accountants, you know that they're tough to sell to. I probably fit.
Shit, you guys never make a damn decision.
And it's fortuitous. Like now I have to sell it to accountants, and you can't not follow through on what your commitments are, and so it's been interesting to be on this side of it, and then seeing that it's not what I thought it was.
Yeah, I think people have a lot of people immediately think I'm a salesman. I've never been a salesman, ever. In my entire life, I've never been a salesman. It would be okay. I'd be okay with being a salesman. I don't think I'd have been successful if I could not have told a story and made an obligation or a commitment to someone like you. Hey, look, man, let's figure this out. We'll figure it out together. I do something, you do something. Can we do it together faster and bigger? It only becomes really grindy when I'm trying to take advantage of somebody.
Right, yeah.
It's the car dealership guy I think about, right?
Yep.
Oh, he's trying to scam me, right? Like, that doesn't fly anymore.
Yep.
You get known so quickly in these worlds. But I like that you said, hey, I had to get comfortable with the way I do it.
Yeah, because trying to do it in a different way would not. You got to figure out what works for you, but yeah, I think that's so true. Is if it's genuine across the board, if you really have something and you're being genuine, it just makes things so much easier. Then the sales internally about investors, employees, it's just communication, just making sure the communication is clear, because it's not like there's anything to hide. And I think I'd add on that too is if you're working with people that have high integrity, then it just makes everything easier. You know how people are going to behave. You know that if there's something really there, you're ultimately going to get to the right answer. And that's
so. Type of clients. Let's say somebody's listening to this. Let's say ExxonMobil's listening to this, or Yahoo, or kind of give us a sense of what is your sweet spot for a customer.
Got it.
Like if somebody's having some challenges, maybe they just bought a company or they merged a few entities. I think we're going to see a lot of that in the next 2 years. You're going to see a lot of M&A where one guy's using QuickBooks, one guy's using who knows what they're using, spreadsheet. Do you come in, is that a good client for you?
Yeah, exactly. Yeah, great example would be you have 10, 20, you could have more, but to say you have 10 or 20 different entities, different businesses, different real estate holdings, other investments, and you're currently doing that in 9 or 12 different versions of QuickBooks and 3 Excel spreadsheets and 2 on even outside of that, and you want to bring everything together in one system easily. That's a great use case for us. And then, of course, if you have digital assets as well, that's helpful. But across the board, it doesn't. We're about 50-50 digital assets versus not. So if you just have multiple entities,
half your customers are digital players.
Yep,
it's impressive because they have a greater need than the legacy guys.
Yep,
the legacy guys can just kind of keep doing the Excel spreadsheet.
Yeah, you can keep it going on a bookkeeping system for longer.
Yeah, fill an air in the tire while you go. Yeah, that's not sustainable, right?
Yeah. We've even had part-time crypto projects that sign up for us. So we're not a bookkeeping level.
You're not a fractional CFO,
right?
Like, that's not your. Do you do any of that?
No, we don't do it. Yeah. Okay. But yes, sometimes at the lower end you get asked, and there's assumptions.
Oh, I'm sure.
Yeah, but we are pure play software provider.
So, a guy like me merges 3 companies together. All 3 of those companies, one guy is a fractional CFO, and then you got 2 CFOs in the 2 other companies, and you got, call it 2 or 3 different accounting people. There's 6 different people. Does your solution require them to keep their 6 people and manage their books separately, or are you able to crunch the inefficiencies out of that and end up with 1 CFO, a couple of accounting people, and your software is doing all the heavy lifting?
It depends. I mean, the idea is we will enable as efficient a process as possible, and typically what we find is our customers are able to go up to the next level. So they're on QuickBooks and they're looking at a NetSuite or a similar solution, and with that, they're also looking at hiring additional employees, growing their accounting team. With us,
so these softwares don't just do it. They got to hire. It's like Salesforce. You get the CRM, then you got to hire an expert to run Salesforce.
It's complicated. Yeah.
Oh my God, man.
But with us, you can keep the same team size. That's the concept. Is it's product
right?
focused.
So no added lift on people.
Yeah, exactly.
Interesting. Are my merged teams going to find that threatening? Or, you know what I'm saying? Like, I see some teams when you deliver software, they're like, hey, this is threatening to my team because you're replacing people.
Oh, no, yeah, we very much know that the accounting, the judgmental nature of accounting is going to require trained accountants to use the product. It's just going to make it more efficient for them to do it. They're not going to be they're going to be doing higher value work.
Got it.
I don't think, it was something I definitely learned doing the monthly close, that there's not a whole lot of free time just hanging around the accounting department. But there is time being spent on things that are not very valuable. And so that this just frees them up to start identifying things sooner, providing more value to management. That's the idea.
So where's your cutoff for a company? Is it in revenue terms? Is it in size of employees? Transaction counts?
Usually size of employees. I say when selling direct, if we're going to be the full general ledger, 500 is probably going to be currently where we stop.
Don't go over 500?
500 employees.
500 and below.
Yeah, 500 and below. And that's if we're the full GL. And I caveat that because it's built at a degree of sophistication where you could use this as a very large company. It would just probably be for a subsidiary.
Internal kind of.
Or just a function. We have a very large multinational conglomerate that is just using us for purchasing for one of their subsidiaries. They use SAP. They just wanted this didn't want to use SAP for this one piece, and so that works. We have these functions that are built at that level of sophistication, but yeah, if you're an enterprise, that's probably where you'd start.
Yeah. So you now I know why you and Perry got along so well. Like the teams look, your story and Jeff's exactly like Sean and Perry. Perry, Sean's the CTO. You know, how often do you bring Jeff into the pitch?
I try to guard his time very, very much, but when when there's a really complicated problem that needs a kind of this sales engineering kind of like how do we package this and solve this, and how do we get this configured in a way that we can deploy our current product with maybe some small changes to solve this really big problem for a customer.
Right.
There's nobody better than Jeff. He comes in and just nails that. But it, obviously difficult to pull him in each time. We usually save that for larger deals now, especially. But yeah, especially early on, we brought this to market, just us two. So we did a lot of that in the early days.
Yeah. Well, I was mentioning Perry and Sean. Perry and Sean are the Node 40 team. I have an investment in Node 40. You just did a partnership with them.
Yeah.
Want to explain kind of what the relationship between the two companies are and what problem we're solving together?
Sure. Yeah. So this is very excited about this partnership. We announced it just under a month ago. So when we started,
did you survey the whole market of potential partnerships?
Yeah. We've talked to we have a pretty good swath of the market. I won't say we've talked to every single one because
there's only about 10 of us.
Right. Yeah. Well,
10, and getting smaller, I think.
Right. Yeah. It's competitive. It's a hard problem to solve. Yeah. Yes. And Node 40 has been around for a long time, and I was just mentioning earlier when we were just getting started in digital assets. We thought, okay, we have to build integrations with exchanges, and maybe I think we ran an Ethereum node for like a month, and it's just not possible to be the general purpose accounting system that we are, and then do that. It doesn't make sense as doing both things, because there's so many chains, there's so many data sources to pull in from. It's very complicated.
Dynamic, man.
It's so dynamic, yeah. And so we toward the end of last year decided, okay, our focus is growing through partnerships, and we need to find partners that can help us take a part of the digital asset side of things. And it just really came together very organically that we were talking to Node 40 about this, and it just felt we were very aligned, like you said, and then we quickly closed a first customer together. I actually think even before we technically had everything ironed out on the partnership announcement, we already had a customer, and so. Yeah,
that says a lot about how we're working together. That's good.
Yeah, it just moved forward.
Because I've seen people, oh no, let's get all the paperwork done until we board the customer. I'm like, you board the customer, man.
Right.
Take care of the clients, please.
Yeah. We're really excited about. It seems very complementary, and I think that's how you really solve the problem in the digital asset space. Is you can't do all of the things, even within the data sources. It's not like every single blockchain, every single protocol, every single exchange. You can't. There's so many. This is such a global thing, and so that's why
Well, and there's different reasons to have it. Like the reason I have it is very different than someone that's an accounting firm. Mm-hmm. Like I'm using it for risk management. I'm using it for inheritance. Like if I die tomorrow, my kids are going to know what to do. Right? They're not going to be left with my lawyers, my accountants, then the forensics, then the IRS calls them. The IRS is going to call my family. Mm. I own too much Bitcoin. They are absolutely going to be all over me. Like when I went into this, I knew it's going to be a cost of doing business. And when you get the letter, there is no, well, fuck off. Mm. Like you have to respond, and a lawyer's going to respond. And then your forensics guy, and they're going to need to know. And if it takes you I mean, I've had one person charge me 40 grand to tell me I owed 700 grand when I never sold it. Now, it's not, they didn't even know they were making a mistake. This is the problem.
Yeah.
So my question to you is, how do you get 40,000 accounting, tax, auditors, IRS people, okay, all these people that are dealing with quality of earnings? I mean, how do you get them prepared for the digital world that's hitting us in the face January the 1st, 2025? Legally, we have a requirement now, right? You won't be a broker-dealer.
Right.
I won't be a broker-dealer, but almost everybody else will be, right? I mean, it's going to touch a lot of people. And where we're not broker-dealers, I'm an investor, I'm treated like a broker-dealer with the same requirements, right? Because I'm going to be the one to pay the bill.
Yeah, I think standardization of this data.
That's exactly right.
Yeah.
That's the right answer. I was with Deloitte the other day. I'm like, hey, there's an opportunity to become the standard right here. Why aren't we becoming the standard, right? Like, the IRS does not want 17 different forms of doing this. And by the way, there's only really one right way to track all this stuff. It's down to zero.
Yeah.
Right? It's math. It should be zeroed out.
Absolutely. And we were working on something that is more to come on this soon about a kind of schema that should standardize the transactions, and it's kind of a step process. You need a standard schema, and then you need to be able to apply the different tax rules and other financial reporting rules to it. But however it actually ends up unfolding, I think standardization is really the way that this is. There's got to be a way to do that, and if the digital asset industry doesn't come together and provide that, then regulators will. Something will come down.
Well, I think we're there now.
Yeah.
I mean, the IRS saying, hey, we need the data. Yeah. And they don't care. I mean, we're going to add, 8 billion 1099s and on top of 4.
Yeah.
That's a 2x increase. I mean, I think if I'm the government, I'm like, hey, I don't really care if it's 8 billion, 8 trillion. I didn't ask you to go invest in digital.
Right.
We still need the data. We want our tax money.
Yep.
And I think it's...
Yeah, if you don't... Yeah, if there's not a better mechanism for providing it, you'll get what you got. Like every transfer is a disposition.
Totally.
Gross up all the volume. Prove to us why it's not that.
Yeah.
And that'll be their starting point. So, yeah, you got to be ready. And yeah, I think there's.
What I see from digital, and I told you about the experience I had. People forensically looking at my digital assets and then looking at my, I hate to use the word real world assets because there's nothing real about them. It's just a bunch of derivative contracts. But real estate, my other holdings and companies, I should be able to do digital much better. Now, if I have the right tool, right? Now, if I have the old analog tools, Excel spreadsheets, like, my transactions fill up an Excel spreadsheet too fast. There's just too many transactions.
Yeah.
Right? I'm DCAing. Or I'm a Bitcoin miner. Oh my God, man. What's my cost?
Right.
And I know it's a real problem because no one knows what the cost of their Bitcoin is. Have you noticed that? Hey, what's your average? I know one guy that knows. I know two guys that know. Me and a guy that owns 800 Bitcoin. And everybody else like, hey, what's your price? Well, that immediately tells me, oh, we're all driving Ferraris with no dashboards.
Right.
And it's awesome at 2 miles an hour. But at 30, I'm going to wreck this Ferrari. At 100, I'm dead man.
Yeah.
I need a dashboard, man. A common dashboard that pulls all, and this is what Node 40 should be able to do because it has all the data. And then it just gives you how cool would it be? Your average cost, you have 32.6 Bitcoin, your average cost is this in this bucket. And if people actually start looking at this correctly, they'll figure out you should not be commingling.
Right.
Right?
Yeah.
There's a lot of mistakes being made here.
Yeah, and then they can think about it before they make that next trade, and not, yeah, like you said, you think you're on high, and you don't realize just because of the timing of your cutoffs that actually you made a bunch of money off the asset that you traded into another asset that
Totally.
appreciated. Now you don't have the money that you owe for this gain. There's not a lot of that management going on. I think a lot of people got burned on that and figured that out, but it's not like they know, like you said, off the top of their head what their basis is in their in Bitcoin or other assets.
Well, and again, it's the people, the trader may know, but the CFO
Right.
and the lady cutting the checks and the accounting and the people that are writing the report to the board, they don't know. And if they don't know, then, what I'm talking about on commingling, for instance, I saw my professionals become much more advanced in their understanding when they had a report that looked like their legacy report.
Right.
And they didn't have to understand commingling.
Right.
Because commingling for a real estate property doesn't exist, right? But they started looking at, oh wow, you got some $8,000 coins, you got some $69,000 coins, your partner's asking for settlement, which coins do we give them?
Right.
Right? And then they started getting smart. Hey, the $800 coins, everybody picks it. Give her the $800 coins, dude. Okay, cool. And she has the tax problem. But don't commingle them. But my professionals were able to go, oh wow, we could do that deal over here because you have these this lost right over here. We'll grab these for this piece of real estate. Man, I saw all the 60-year-old guys around me that had been in law and accounting. They were like getting really clever. They weren't, let me see, what do you have over, they weren't squinting to get there. And I think that's what you're doing. You're providing clarity for your teams to not have to go through this item by item and track every little thing.
Exactly. Yeah, I think that's a great point on making it more familiar, because that was designing our software from the start. We tried to get fancy with some things and realized, which is good. There's some things you want to update, want to take advantage of the technology, but making it familiar was very important for people to get it. And I think meeting somewhere in the middle and being able to provide all the data is really critical. And you can't skip that providing all the good data part. You were mentioning around everything zeroing out at the end. You can't get 95% of the way there.
No, there's no justification on digital.
Yeah.
That's what I love about my team. They're like, hey, this is math. It should be 0.0000. Okay, you might have a 1 at the end of 6 digits, but that is a rounding error.
Right. Then you can round it. Yeah.
Totally. Yeah. But I love that. Most people go, hey, we don't do that in legacy. We get close. We're good. 50 within 50 grand. We're awesome. Whoa, with digital, that 50 grand could be 500. You could just make a zero problem. And it's not going to hold up in a courtroom if it's got a bunch of hair on it. To be able to nail it down to the penny puts the other team on for me, I think all you guys are going to get audited. So for me, the most powerful tool is I need a tool that I can have 37 auditors in the room and they all can, we can't come up with a better number.
Right.
Their number settles to 0. How can you beat that number?
Yeah. Yeah, if you have that reasonable methodology you use to get everything in, what do you point to in an audit that's different? I don't think there's a laid out better, best practice that anyone's hanging their hat on right now. Yeah.
You get me excited because I think that we're in the first inning of a 30-inning game, and it's so early. I think Node 40 was early. I think you were early, but I told Perry and Sean, I'm so glad y'all came in early, because you couldn't start doing this 3 years ago. Yeah. You had to have the experience, understand what's working, what's not working. Now we have regulations. We have Treasury making a clear statement on what broker-dealers are and what they expect. They're going to get their taxes. People should leave this country if they don't think they have to pay taxes on digital assets. And we are to me, this is a Larry Fink moment. We are going to tokenize everything, man. Everything. This thing, this art, it's all you're going to have clients buying fractions of art.
Oh yeah, I've seen a couple of projects you're talking about that. Yeah.
Well, I mean, that art to me is a real use case for NFTs, for fractionization. Like to think that I could buy a Picasso, I can finally compete with the Rothschild family, just a little piece. That's going to drive those values up. But much bigger population of buyers.
Yeah, and that is a example of it becoming more liquid.
Oh,
That would
totally,
be
man.
yeah.
And like, who's going to account for that?
Right.
About 1/10 of a Picasso. What's the value this year?
Yeah.
Like, there's going to have to be audits on this stuff.
Yeah, that's what we've been working
It's
through.
just
Some
going
of the,
there, man.
Yeah.
I should be able to rent. I should be able to lease, man. Okay, I should be able to borrow against the bloody Picasso. Who's going to account for that? This is where we're headed.
Yeah. Yeah, and then I mean the good news is that because if that's tokenized and it's machine readable, then you can automate a lot of it, and so it'll make a lot of things more efficient too. So
Well, and it'll make it a very liquid market.
yeah,
I mean, we're going to have wrappers on top of wrappers.
yeah,
Everything. Now, I think houses and the real estate, the confusing part about the industry for you and I is building software when everybody's talking about, we're going to NFT houses. Well, let me go spend some time on that. Well, no, it's not going to happen for homes are not fungible.
right. Yeah, and I know that there's just a lot of regulations, and homes are not fungible,
And it might be early.
It
might be just too early, right?
Yeah,
but
yeah.
this to
Right.
me makes sense. And I know that they're doing the images and the PDFs and all that stuff,
Yeah.
the meme coins, but dude, they're just practicing around with that.
Yeah.
It will lead to this. It will absolutely lead to it because there's only one of those.
Yeah.
Not
Yeah,
gonna be
it'll
two.
it'll converge for sure.
Totally,
you
man.
can definitely see that happening.
Yeah, so where do you see your company going? Like what's the next 2 to 3 years? Is it super growth, stay private, raise some more money, go public, merge, partner?
Over the next few years, just capitalizing on what we've done so far, doing more of what we have so far, and doing it pragmatically, at least in the near term, to just. So basically, if you look out 3 years from now, our team looks similar, except we have a lot more people, and the functions that we have that are pretty small are blown out a bit more, because I think that there's so much more room to run doing what we're doing currently. So serving customers that have digital assets, serving traditional multi-entity customers. We have an OEM part of our business that's growing pretty well over the past 9 months or so. We've seen a pretty big uptick, and so really just serving all of those customers in the same way, but just kind of increasing our investment and go to market as we can, and as it makes sense to, and other areas.
How does your product scale relative employees to clients? Can you add 100 clients without adding 50 employees?
Yeah, exactly.
Scalable.
Yeah, and so we've worked at that really hard to make it very scalable. The product's extremely scalable, and so that's it's there. There's a lot of economies of scale already built in. So I wouldn't say there's a one for one. We add 10 customers, but over time, more customer support and functions around making sure that we're providing the same levels of support, but maybe more guides, we want to make it as self-service as possible. So we don't want anyone, if they don't want to talk to us, we want to give them the answer, and then we want to be there to be able to answer any questions and guide them through how to use the product and everything. We want to make sure that we're there for that. But a way we can do that at scale is by just having really good user guides and videos, tutorials, all that stuff. So yeah, I guess it's kind of a boring answer of just growing more pragmatically, but fast over the next few years as we have this partnership approach that through Node 40. There's that's just in digital assets, but there's other business functions like accounts payable, expense management, reporting, pretty much anything, e-commerce there's anything that we hear in our customer base or prospects when they come to our website, we want to be able to say yes to everything. And that could be yes with a partner. And just keeping on doing that, what we've seen so far, there's a long room to run growing, just doing that function and servicing that and doing it efficiently with not dramatically increasing our team size.
Right. Who does what you do besides yourself? Who do you compete with?
We generally compete with NetSuite or Sage Intacct. Those are the two biggest ones that come up. But that's the kind of the market that we're in, that mid-market space for companies outgrowing their small business accounting system. Usually QuickBooks, sometimes Xero.
Do they have the capability to do any digital?
No one's built anything specifically digital yet.
It's amazing. I want to ask you questions. I'm not even sure I should ask you on the camera, but I'll go ahead and ask it and we can figure out if we need to edit it later. But have you ever thought about lighting up a digital accounting firm and doing both services?
Oh, right. Yeah.
I could see how it could be very, very symbiotic for both.
Yep, we've thought about it for that reason over the years, and have deliberately not, for the reasons you probably expect. It is running we're running a whole other business that's a services business with everything that goes with that. It's just a lot, and I think to serve our customers better, I think finding good partners is really the best approach right now. And we really think for the future. We don't really have a plan to do that because we think if we find good partners, we have a good partnership motion down. That's the best case scenario. We really feel that that's strongly about it. But early on, especially, it would have been a whole lot easier to acquire customers if we were providing accounting services too.
Yeah.
Which I think you've seen with a lot of these, magically automated accounting startups where they're actually providing services, and then the plan was to figure it out later. Which as far as I'm, they were going to be a software company, but start with services and then automate on the back end. And I don't think that's really ever worked that great, as far as I've seen. So, there's a real benefit to just focusing on the software and making sure that that's really good. Talking to our customers about any problem they have, answering questions, providing guidance. But once it gets to be actually doing the accounting work, it's just tough to do both.
Yeah. Yeah, and when I say accounting, I'm talking about the full suite. Yeah. Audits, forensics, the whole. You're not really going to make a lot of money on doing taxes. It's the other stuff, right? Mm-hmm. Quality earnings that nobody seems to think you can do. If you can do quality earnings on an operational business, you can absolutely do quality of earnings on any commodity trader. Mm-hmm. Absolutely. Like, where are you making your money? You think you're making your money on day trading, but in reality, you're making your money on something totally else. The third eye, it just gives,
Yeah.
I'm a trader. Like, is the accounting department really going to trust Gary? Gary's like, Gary trades. He chases alpha, right? Well, your deal is, let's keep Gary, we don't want to tighten the cage up around Gary too much, but we want to understand where Gary's really trading, and we can represent it to the board. We don't even have to bring Gary into the board meeting. Mm-hmm. Gary made his money here, here, and here. These trades over here that used our credit line, maybe we didn't need to do that. Then y'all come back to me and go, yeah, I needed to do that because I got my intel over here to do this trade. Yep. And then my boss says, Gary, you can keep doing it or not doing it, but it really just brings everybody in the loop.
Yep.
Otherwise, nobody's going to know what I'm doing, man. Nobody.
I think providing that tracking and transparency, it's
clarity.
Yeah,
which is what you're doing.
It's just more information.
More information.
And you can, and then that can be the starting point as opposed to having to wrangle it each time and then deciding what to do. And usually at the end of the year, hopefully not, at the end of March, early April, which I hear too often. Oh yeah, talking to Perry about the last minute request sometimes.
I tell Perry, I said, Perry, you got the wrong clients. You need clients like me who already know in February we're filing an extension.
Yeah.
That's the guy you want.
Right.
Oh, let's get all those October guys.
Right. I already know I'm not going to make it. Yeah. We'll
Totally.
Yeah.
Totally.
Kind of the same way.
What, you've raised a couple $1 million. Will you do another raise, or you don't need to?
We don't need to. I think we will. We will want to grow faster. I think that is going to make sense at some point, but we don't need to. And so that's plan A, was just to get, we're efficient enough. We can generate cash. We can operate with a lean team, and so that's plan A right now. I'd say growing while doing that, which of course is spinning a lot of plates in the air. But
yeah, and do you think the market's robust right now for, like, do you think people are looking for software companies to invest in?
I do.
Or they just want to do the tokens?
I think it feels choppy. It feels like people are, if they're still looking for deals. It's just the sense that I get. We're not raising, so this is kind of anecdotal, but that's just the sense I get is, and of course that's not true broadly. There's still great companies out there that are raising money, and that's going to be always the case. But a lot of it does seem like it's just people are waiting. There's a little bit too much uncertainty out there.
Yeah, I'm noticing the money that's moving around. It seems to really love this token business. It's and I find that interesting because there's just no chance of me investing real money in that. But I look at these software companies, like, I love what you're doing. Like, to me, you're filling a hole that can't get replicated. Like, I will never deal with a company the size of NetSuite, or Sage. I'm not going to do that. I'm probably not going to deal with a top 4 accounting firm. This is really interesting. I have 4 accounting invoices. One from the top 4, they do quality earnings, $600 a year. I've got another guy that does forensics on another business. That's about $150. These are all serious accounting firms, right? Top 100 players. One that does my personal taxes, and one that does something else. Not one of those companies have ever asked me to do all of it. And I would rather do it all. But because you're in a cool position. Because they're all separate divisions, nobody wants to talk. Like, they can't even get the lead through the company. Hey, contact Gary Cardone for this. You'll get $600,000. I don't want to pay EY $600 and then pay Deloitte $300 and then pay some other guy $200. I'd rather. Can you just look at all my business, please?
Right.
It would be more efficient, but they can't. They're incapable. I don't mean to be picking on any of these firms. I'm just using names so people understand. You know what I'm saying? Like that. The reason I like your business, because I think you're going to see a lot of tertiary little opportunities.
Right. Yeah. By sitting
supercharge your revenue, dude.
Yeah. No. Thanks.
Supercharge it.
Yeah. That's what we see. Sitting in the middle. It's kind of accounting is kind of the backbone of a lot of the whole business. That's what drew me to it in the beginning, actually. But that a lot of opportunities will come out of that, I think. And to your point, larger firm. It's just There's some real reasons, and then there's some just big company inefficiency reasons. But yeah, it's tough to cross over and have different services provided by the same group.
Yeah. Well, you said, hey, we want to deal with companies with 500 or less employees.
Yep.
You don't want to go in Chevron or 800,000 people.
Right. Although Chevron's, natural gas flare Bitcoin mining project, that's a different story. They all have them now, so
they all have them.
Yeah, it's very interesting how the geopolitical implications of Bitcoin and what will unfold here.
All the game theory that's going to be associated with it. Very, very, we're in for a decade of a very interesting. I think this year we will have a country like Turkey put Bitcoin on the balance sheet. A big country, not a super country, but big enough to be. They're a part of NATO, man. What did they just do? Yeah, they're part of NATO, half their country, but they're piggy in the freaking middle.
Right. Yeah, just as a hedge, it just makes it.
They're long hydro. They're long. They got gas coming from Kazakhstan that's like nothing.
Right.
They're long sun.
Yeah. and it's kind of intertwined.
And they don't. The only thing, they don't print their own money.
Right. Yeah. Yeah. It's going to be.
It's going to be fascinating, really.
Yeah.
I think it's going to offer companies like I don't even think you and I know all the opportunities.
Right.
That and people go, why don't you just buy in Bitcoin, dude? It's a better return. Which I agree. It's a hassleless return. But one, being in the operational side of the business, you learn a lot more than just owning Bitcoin. And what if you and I are really right, and this whole planet, we never have 6 million accounting people doing this? Like it suffers, man.
Yeah. Well, and you see it with the accounting profession today. It's tough to get and maintain and retain talented accounting professionals. People don't want to do it as much leaving universities. There's really stringent requirements, and I can't blame anyone for not wanting to go and work for a couple of years, tearing their hair out as their first job. That's kind of part of the deal, which it was a great way to start my career. Honestly, it was I wouldn't take that back, and it really set the tone and learned how to work really hard and efficiently and with really smart people. But it's not based on the current number of accountants, it's not possible to do all the things that are needed, and so much automation has to come in and fill the gap.
So much, and I think a lot of them are gonna. This is why I asked you a question about the digital tax thing, because I just look at it and go, well, none of these guys are moving fast enough. If I was a number 50 accounting firm, I would be in a division going, okay, go poke the top 8 guys.
Right.
Because they're not going to move fast enough.
Yeah.
And you steal some really great clients from these people. And they're lifelong customers. 35-year-old.
Yeah. Yeah, you don't want to change once you're used to, yeah.
Oh, I've had 13 lawyers, 14 or 15 doctors, because I rode motorcycles and did stupid shit. 3 wives. I've had 1 accountant, man. And like I'm getting ready to change him because my digital thing's just too big. Like the tail is now swinging the dog. But when it dawned on me, wow, I've had 1 accounting guy. Nobody likes to change people that do what we do. The information is just very sensitive. So I think it's just very sticky.
Yeah.
Very sticky.
Yeah.
See, I think your growth and Node parties, it's not going to come through. I think it needs to come through partnerships and mergers, because there's so many tangential things you can add. This is like almost like a hub, and you start adding spokes of expertise, because we're talking to the same customers all the time. There's not, like literally, we are all talking to the same people. Exchanges, funds, institutions, super wealthy families, and those that serve that group of people. They're all the same people.
It is true. There are a lot of...
And the inefficiencies in some of the old legacy, like, oh, wow, you have 4 divisions talking to one client? That's weird. I know they're separate, but they're all numbers.
Yeah.
They're just numbers.
Yeah.
You bring AI into this. Once we get AI going, like, really, we need the data, though. You can't just go AI this. Everybody, oh, I'm going to AI this. Hey, you need millions of pieces of data to do that.
Yeah, the lot of data with the right categorization that the accounting products bring.
And build a standard. You know, if you would have told me there were 4 or 5, I had no clue there were 4, 5, 6, 7, 8 turbo taxes. I had no idea. It just shows you like how many companies serve an industry that it's a regulatory thing. It's just
and you see like it'd be interesting to see too how that's automated more in the U.S. going forward, because the U.K. and Singapore have, and many other countries have digital tax filing requirements.
Right.
So they're looking to automate this, and then some other. It's interesting to see the different approaches countries take, about how to do that. But it's inevitable that at some point it's going to be a lot more programmatic how you're whatever your financial activity happens during the year, that it gets to the IRS, which I think a lot of people would welcome, just to make that.
Oh
that
yeah,
less
to make it
painful at the
simple.
end of the year. Yeah.
Yeah, for sure. Where would people reach out to you as we're closing up? How do they reach you? Do they contact you directly if they think they have a problem that you can solve?
Sure. Yeah. You can reach me at ben@softledger.com, and then at softledger.com you can find more about us and what we're doing. And yeah, definitely, if it sounds like we can help, please reach out.
So, in the deal you're doing with Node 40, you basically have the rights to use their compute technology to drill down and account for, track, trace in a monetary way. Do you wrap that piece together with your solution and it's all in one?
Yeah, we've an integrated solution to solving this problem. So if you have digital asset transactions and you're a business that needs to roll those all together easily, we can help.
Got it.
And that could be with your existing ERP even, and just us as a component. We're kind of malleable in that way. So,
how long does a pitch take you? I'm trying to get you a lot of phone calls. How long does it take a guy like me to call you and find out whether or not I'm actually worthy of you helping me, and whether or not it's an exchange that makes sense between both parties? Is it 10-minute phone call, an hour phone call?
Yeah, it's
for discovery.
The first call can be as little as 15 minutes, 15 minutes to 30 minutes usually.
That's what I liked about you guys, because y'all's pitches are really short, and ours is like 12 minutes. I'm like, great. You don't need a long pitch, man.
Oh, we're hoping, it's a work in progress to try to make it so the website conveys that as well as possible. But
yeah, it's hard though.
Yeah,
especially when you're pitching to people like you.
Yeah,
because you want, hey, I need to see. I want to see zeros, man. Mm-hmm. That's what I've seen all this. I'm not impressed with these demos.
Yep.
When you show a detailed person 800 data points to go gather a bunch of tabs, they get excited, right?
Yeah. And I think one of the things that we've tried to do recently is consistently make it easier to do business with across the board. And so offering a free trial is something that we released late last year. So if you really just want to get going, don't want to talk to anyone, and get in the product, you can do that now.
How long is the free trial for?
For 2 weeks.
Okay. Yeah. Do they get enough to understand?
Yeah. And
that's cool. 2 weeks. Mm-hmm. That's tempting. Wanted to ask you one last question. It was around security, because I know that it was a big deal for me with Node 40. Mm-hmm. Where are you on the security band? SOC 1, SOC 2?
Sure. So we have a SOC 1 Type 2, and we've decided that we're going to get a SOC 2 Type 2 shortly. Timing is TBD, but
yeah. But it's on your path.
Yeah, and
I think that's all anybody can ask a young company.
Yeah.
Come on, man. You ain't got to go SOC 2, SOC 2.
Right. And we've done a lot of the diligence stuff for big RFPs. Some of our larger customers have really required that, especially the OEM ones. So a lot more, there's a lot more specific details.
I didn't ask you that. Are you doing work with governments?
We don't have any current direct government clients, but that is something that we've explored and are continuing to pursue. If there's a government application here, we can deploy into AWS GovCloud and that sort of.
Have you talked to Perry? You see this? You might want to talk to Perry, because we're making some headway there.
Okay. Yeah. We should. Yeah.
Well, they want a lot, man.
Okay.
Yeah. If they do this smart, they're gonna do. They will drive the standard. Back to what you and I were talking about. Might be worth a discussion.
Yeah.
But that's something that I made them start 2 years ago, because everybody's like, hey, it takes forever. Good. Okay. Start right now.
Yep.
So the sooner you start, dude, it's like you're SOC 2. You got to do it. You're not going to serve a big player if you're not all secured up.
Oh yeah.
That's why I asked you the question. It's
exactly.
Very important. Okay, you don't want it. This is too sensitive of information to not have somebody that's got all the security.
Yep.
And a goal to get fully complete, whatever that looks like.
Yeah.
At whatever cost.
Exactly.
Quite frankly.
That's exactly the reason we decided.
It's too sensitive.
Yeah.
Well, listen, thank you very much. I don't know if you have anything else to add.
No, just this is great. Appreciate you inviting me on, and